Tesla, Palantir, CrowdStrike. One name that you're not seeing on that list? NVIDIA. Dan Ives behind the call. He is the global head of technology research, and I have to issue the biggest correction in the history of my career, which is now that you're in the light, that jacket is not McLaren papaya. It is, I would dare say, peach.
Look, I mean, I'll take both sides. Again, you never...
That vital correction now aside, why is NVIDIA not on your tech names to own next year, Dan?
Yeah, look, it's still, I mean, still in our Ives AI 30, a top tech name. But ultimately, to me, in terms of the five that stick out, it's really about how do you play the AI revolution on the hyperscaler? How do you play it on the consumer in terms of Apple? How do you play it on enterprise with names like Palantir, CrowdStrike, cybersecurity? Brian, I view it as like NVIDIA, there's only one godfather of AI, Jensen. We'll see him next week at CES. But the derivatives, the second, third, fourth, just starting, which is why we're so bullish in tech.
You're in the Hall of Fame, Dan, regardless of color, although Oscar Piastri just emailed me and mentioned that he actually thinks the color is a McLaren papaya.
Well, there you go.
With that said, what does Palantir, what do their revenues need to be? They're going to do $6.5 billion of revenue next year to justify a $500 billion valuation, in your opinion.
Yeah. Look, I mean, to me, and we've talked about it a bunch, it's that it's ultimately it's the commercial business that I believe could ultimately be $2-3 billion when I see it playing out. I mean, I think when you actually do the trajectory here, I think numbers where you see for Palantir in 2026, I think they ultimately double over the next 3 to 4 years. And it speaks to the point. Super expensive stock today, but I just view it, I think it's $1 trillion valuation in the next 2 or 3 years as the AI revolution plays out.
So everyone knows you for these marquee names. And when you go into CES, what I always look at are a portfolio of names that are going to shock people, something that shows up. If you search anything with CES, you'll see robotics come up. What are the names you see you meet with everyone, both private and public companies? What companies are going to, A, be there and have impressed you already?
Yeah, I think when it comes to robotics, I think maybe like an off-the-radar name that we're bullish, Serve, like Serve AI. When you look what they're doing on robotics on the delivery side, what I view is actually true autonomous playing out. They'll be there front and center. And look, Steve, to me, it's really like the autonomous is going to be front and center here. It starts with what Jensen's going to lay out. But this speaks to autonomous robotics is going to be key to what I view as and that's one of the core names.
All right, Dan, talk to us about RPOs. This is not the run pass option. This is the remaining purchase obligations here. Not something that I think a lot of folks were talking about too much until this summer when we saw, that huge OpenAI contract with Oracle, and a lot of investors were really excited. And, as an analyst, though, you see this big number, right? You see a $500 billion purchase obligation. How do you think about that? It's not in your numbers, right? But it helps kind of formulate how you're thinking about future revenue. To me, the market called BS on this with Oracle. And how do you think about it? Is this something we're going to see? Maybe some of these contracts not come to fruition.
Look, I think we sit here a year from now. I think actually one of the names that's going to stick out is sort of the renaissance that's going to happen in Oracle. Because to me, when I look at what's happening, where they play from the stack play, where they play in terms of AI revolution, I think investors are wrong to call out that this RPO, what I've ultimately, a re-acceleration of growth, that's going to go from 18% to 30% to 45%. I think 80 and 90% of that gets done. So to me, would I take out 5% debt if I had a 100% chance to ultimately do what they could do? Yeah, and I think that's what they're doing. I think that's why Oracle, to me, right here, it's a
inference technology. Joining me now to discuss what a deal like this means for the future of the AI race and the whole ecosystem is CNBC contributor Plexo Capital's Lo Tony. It's great to have you, Lo. What do you think of the structure of this deal that NVIDIA is doing? It's not an all-out acquisition, but it's not that dissimilar.
Yeah, it's interesting because some of these headlines frame the deal as a strategic acquisition, but really, to me, this is more clearly an architectural admission. Most people think that NVIDIA bought Grok, but they didn't. They really captured a capability, and that's the architecture, specifically the LPU, without the regulatory friction of buying the whole firm. And they had to do that because of inference economics breaking the old math.
What does that mean? What are they actually getting?
Yeah, so when you think about NVIDIA, the GPU dominates training, but training is very episodic with big spikes. So inference is when people are actually using the models to execute chats with GPT, execute agentic workflows. And that is a different math because inference already costs 15x more than training over a model's lifetime. So that's really the math driving this deal. It's like the training attracts the attention, but the inference determines outcomes.
What do you make of what they're paying here? I mean, Grok was last valued at $6.9 billion in a September funding round. NVIDIA has, according to our David Faber, $20 billion price tag on this deal.
Some could argue it's a drop in the bucket. Some could argue it's overpriced. I think when we look at NVIDIA and where they are right now, with the GPU, they were built for flexibility, but they ran into the problem, and they knew this problem was coming, that inference is now starting to dominate. And so it would have been tough to retrofit the GPU. So this deal does make sense. It is expensive, but they have the money.
Is it a defensive move to hold off competition here in Grok?
Yeah, I think look at it as, it is slightly defensive. They're not necessarily late, but they are reacting. And I think we should go back to a comment that your prior guest made about Google and the fact that it's vertically integrated. The core of that vertical integration is their TPU chip. Now, the founder of Grok, Jonathan Ross, actually built the original TPU, or what became the TPU, during his 20% time at Google, because he saw this bottleneck coming a decade ago. So NVIDIA is doing the same thing, right? They're integrating at the infrastructure layer, but under much tighter regulatory constraints. They can't buy everyone, so they're just licensing the capability.
Right. So all in all, if you're, I know you invest in early stage startups, so not necessarily a company like an NVIDIA, but does it make you like NVIDIA more or less?
The way I think about it is when we look at NVIDIA and the stock and the run-up, that reflects the training boom. We've seen all of these models execute on their training strategies, and now they're starting to really focus on the ability for people to execute these models. So what this deal does is it protects NVIDIA's stock for the future inference boom.
Yeah, it was interesting. Earlier we were talking to Jonathan Canner, the former DOJ antitrust chief, and he was saying it actually raises some red flags, even though it's a non-exclusive licensing deal or whatever they're calling it, if they're trying to take out competition and take out a key hire of a company that could be bigger if it wasn't doing this deal.
Yeah, and those are the things that are going to happen. We've seen Alphabet/Google execute one of these deals as well with Windsurf. I suspect that people will continue to push the envelope because of the regulatory nature of when these deals get scrutinized for being anti-competitive and monopolistic. We'll see. I think NVIDIA will be able to get this deal through, but I think when we start to see more firms, especially the Mag 7, try to execute these, it's going to be a little bit tougher for them to be able to continue with this type of approach.
Hey guys, welcome back to my channel. I hope you all are doing well today. Alright, let's talk about what really happening in this market. Because right now the most people are looking at the surface, but they are missing the deeper story completely. If you step back and analyze what going on, it becoming a very clear that artificial intelligence is not just another tech cycle. This is not a social media. This is not a mobile app. This is an infrastructure, and the infrastructure cycle don't last for 1 or 2 years. They last for decades, and that's why I believe we are heading into the another year where the AI stocks will continue to outperform the broader Nasdaq. Not by title, by a lot. A 10 to 15% move across AI names in a single year is a completely realistic, and that's before you even factor is in the leader like NVIDIA, which are operating in a completely different league. Right now, the biggest misunderstanding in this market is timing. People are asking, is this is a late? The correct question is, how early are we? Because we are still in an early infrastructure build out phase. Data centers are still being planned, power grids are still being upgraded, chip supply is still constrained, sovereign AI projects are just beginning. Agentic systems are just entering the products, and robotics and physical AI haven't been begun to scale. This is not a mature market. This is a foundational being poured, and when the foundational are being poured, the company is selling servers, steel, cement, wiring, compute, memory, networking, and the power infrastructure dominate everything else. That is NVIDIA. Why NVIDIA is the center of the entire cycle. At the start of 2025, Wall Street was projecting NVIDIA to grow about 15% in the calendar year 2026. Think about that, 15%. That is the what analysts thought before the Blackwell Ultra, before Sovereign AI, before inference exploded, before agentic workflow scale, before robotics demand started forming. Uh, Fast forward to today, those growth estimates are now worth of 15%. NVIDIA own guidance point closer to the 65%, and that still does not include China reopening, any major robotic acceleration, any government AI factory build out, and any physical AI monetization, any inference explosion at the scale, which means something extremely important. NVIDIA could realistically grow over 17% in 2026. For a company of this size, this is a historic. That alone tell you this cycle is not late; it's accelerating. Why the grok deal matters even more than the people think. Let's talk about the grok deal because the most people completely misunderstood it. Officially, it described as non-exclusive licensing agreement. In reality, Nvidia paid about $20 billion to absorb grok inference architectures, their senior leadership, their founders, a TPU architecture, their roadmap, and their competitive threat. This is not just a deal. This is NVIDIA securing the next phase of AI economy. Training at attention, inference print money. Inference is a very every chatbot query, agent workflow, robotic decision, stimulation run, and enterprise automation actually consume the compute every single day forever. Inference over the model's life cost more than the training. That is why NVIDIA moved. They did not wait. They neutralized a future threat and strengthened in their mode. Why this cycle is still early? People are seeing $1 trillion market cap and assume the cycle must be late. That logic is wrong. Infrastructure cycle do not end when the company become large. They end when the supply finally exceeds the demand. Right now the compute is constrained, power is constrained, memory is constrained, networking is constrained, and cooling is constrained. Data center capacity is constrained, skill level is constrained. Everything is constrained. That is not a late cycle behavior. This is a early cycle behavior. The next phase, agentic AI. Agentic AI is not a feature upgrade. It is a paradigm shift. Instead of AI answering questions, it performs actions, automation, workflow, running companies, managing logistics, negotiating the purchases, monitoring system, controlling machines. These machines increase compute demand not linearly but exponentially. And NVIDIA is the infrastructure layer beneath it all. Physical AI, the multi-trillion-dollar wave. This is a phase nobody is priced for. Robotics, stimulation, autonomous factories, warehouses, medical robotics, and defense robotics, autonomous vehicles, smart cities, NVIDIA already own. NVIDIA already own Omniverse stimulation, CUDA software, AGX robot hardware, GPUs, training plus interfaces, networking, Mellanox, and memory interfaces, interconnect architecture. They are not a chip company anymore. They are the operating system of the physical intelligence. Product roadmap. This is why the moat is unbreakable. Blackwell Ultra ramping now, Rubin in 2026. Rubin CVX is a late 2026. Rubin Ultra 2027. A phenomenon in 2028. And we already see the next 4 year of demand. That alone destroys the bubble native narrative. The big picture. Jensen Huang believe global infrastructure will exceed the 3 to 4 trillion by the 2030. That is not a hype. This is a grid upgrade. Power plants, data centers, cooling, networking, compute, storage, and robotics and automation. This is the largest industrial transformation in the human history. And NVIDIA sit at the center. Final thoughts. This is not the end of a cycle. This is the beginning of an era. NVIDIA is not peaking. It is the position itself become one of the most important companies on the planet. Stay calm, stay long term, stay patient, and understand what you actually own. And if you are watching this video till now, please subscribe my channel and like this video so many other people can